Bitcoin has seen an impressive break of 28,600 higher time frame bullish trigger. This resulted in a significant rally towards 30,000. The question now is this the start of the bull run, or do we still have a possible chance of rejection? Let's get into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. What a crazy day for Bitcoin. We said in yesterday's video, the longer the consolidation, the more explosive the move. And boy, have we seen an explosive rally today. Bitcoin breaking through that 28,800 higher time frame bullish trigger, resulting in a significant 7% rally all the way up to retest the mid $30,000 range. The question on everyone's mind and the question we're answering today is, how high can this go, and is the bull run back? Will we see a rejection, and what can we expect the price to do leading up to CPI? Now, before we get into it, smash the like button, hit the comment button, subscribe to the channel. We do daily videos for Bitcoin. We focus on the charts, the data, the technicals, the information, the news events. Everything is perfectly executed as per our videos. We don't focus on BS. We don't focus on emotions. We don't talk about shilling coins. Pure factual information provided here on this channel. If you want more of that content, you can find us on Telegram. That is going to be the second link down below. Updates, charts, analysis, videos, news events, information, educational posts, so much more. If you're interested in supporting the channel, you can go ahead and sign up to Bitget for 15% off your trading fees and join our VIP, where you'll get access to 2 group chats. You'll get access to our main VIP channel with entries, targets, stop losses, etc., and of course our exclusive group chat channel, which is our VIP exclusive one. You get access to 3 group chats: our trading and charts, where we talk about trading, charts, scalp trades, etc., and our general chat as well, including help and extra videos. You can find all that information in the free channel in the pinned comments. So let's go ahead, guys, and get into the video, starting off with the market data. How are we looking? Looking at volume, we've seen a 78% jump up in volume in the last 24 hours, sitting around 91 billion. That is more like it. 91 billion seems a little bit more as per what we had been expecting for this month. We did see quite a low volume range over the last few weeks, but that has ended now with an aggressive break upwards. With that great break upwards, we saw that our liquidations went up 153%. Of course, large moves always result in large liquidations. In this instance, we did see the price move toward the upside, and we did see a lot of those shorts get liquidated. The volatility index, again, is a 30-day period. It is still showing that the volatility is dropping, but if it does adjust for the last 24 hours, we would have actually seen volatility increase, because we know volatility is increased if volume increases. Volume increases, liquidations increase. We know volume increase, volatility increase as well. So we can say that although the 30-day and the 60-day index hasn't quite yet factored that in, it has increased within the last 24 hours, which has been one of the main triggers for the continuation upwards. Looking at the broader markets here, we have seen the DXY, and I was looking at this earlier today, and I think I may have missed something, maybe some news events, but holy hell, guys, look at the spikiness on the DXY right over here. Let me know down in the comments if something happened overnight that caused this particular wick to occur. I didn't see it. I wasn't paying attention. Obviously, I haven't looked at the market in that regard in terms of economic news releases today. So let me know, but very interesting stuff. The DXY was able to bounce and still find support on this lower support. And again, we are still looking for a move up to this range. We don't really expect anything to massively occur, guys, until CPI in terms of the DXY. CPI is really going to be what drives the DXY either up or down, and that's going to really impact the future direction of the financial markets and, of course, the cryptocurrency market. So watch the DXY, watch CPI, and then we'll find out a little bit more about the narrative that's being pushed and the potential future direction that the markets are going to take place. Looking at the S&P 500, guys, we can see we are very much in the same position as yesterday. Again, we do need to see a break of this upper horizontal resistance range for a continuation upwards. Until then, we are under resistance. We do have the possibility of coming back down. But again, we need to wait for the CPI data. We are in a higher time frame ascending channel formation, which is this pattern over here. Therefore, a retest or breakdown of this trend line will result in a continuation downwards, and we are looking for a higher time frame touch of this red box or upper resistance for the bullish scenario. For the Dow Jones, a very similar thing, except our uptrending trend line is represented by our dotted trend line, okay? A loss of this level will result in a continuation back down to retest some of these lows. Alternatively, a break over these local highs will result in a continuation upwards to retest 36,000. So keep an eye on those levels going forward into CPI. Now, CPI is only in a couple days. We're looking at tomorrow around 10:30, so we're looking around 36 hours away. The CPI data should come out, so we are going to see a lot more market-wide volatility, a lot more manipulation, a lot more spoofing on the market orders to trap people in or to push people in the directions before the market makes that move. So do watch out for that, as pre-CPI pumps or pre-CPI dumps are very, very common. Let's go ahead, guys, and get into Bitcoin. So Bitcoin, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Like we've said, has broken through that short-term high time frame trigger. This was a short-term high time frame trigger. We're actually discussing in yesterday's video, we said we had a descending trend line here on the 4-hour chart. Our descending RSI trend line was going to be the trigger for a continuation upwards on the short term. The short-term continuation upwards being the move towards our high time frame trigger. We saw that breakout occur. That was the confirmation for a move back towards this high time frame trigger, and the break above the high time frame trigger on the 4-hour was confirmation of a continuation upwards to $30,000. We actually went a little higher than 30,000. You can see we entered this low resistance range. We said in yesterday's video, volatility, speed, and volume will all increase above and below our high time frame triggers. We saw a rally to 30,000, awesome to see. In fact, our spot bags are massively up right now. If you are in if you've been watching the channel for a long time and you did buy our spot bags at 16,500, 18,000, 20,000, 21,000, 22,000, you'd be up anywhere between 81 to 35% on your spot bags. So absolutely phenomenal stuff. Very impressive to see. Moving on from there, guys, let's take a look at the higher time frame. So Bitcoin is, of course, broken toward the upside of the 30,000 level. However, guys, there are 2 things we need to be watching for. Number 1, the monthly candle close, okay? Number 2, CPI. Now, the reason these are 2 really significant events in determining whether this move here is going to be a rejection, okay, or a validated breakout, which will continue upwards, it's really important stuff. First and foremost, CPI is going to give us a little bit of insight in the Federal Reserve's narrative, which they have been developing over the last couple of weeks. If the CPI data comes in lower, meaning inflation is dropping, the Federal Reserve is going to be more justified in their current stance, which is they want to go ahead and bring down interest rate hikes to an eventual pivot. If that is the narrative we get on CPI, and that is the narrative they push towards us, the logical conclusion of that is going to be at some point in the future, there is going to be a pivot. And when there's a pivot, the cost of debt massively decreases. What does that do to the US dollar? The US dollar decreases in value, money flows into assets, assets rise in value. We can assume the financial markets will increase in value based on the perceived systematic risk decreasing in the near future when the Federal Reserve pivots. That will be the economic trigger for a continuation upwards for not only cryptocurrency, but also the global financial markets such as S&P and Dow Jones. That is why CPI is so important. However, if it comes in worse than expected, it will show contradictions to the Federal Reserve's narrative, and we will see the opposite effect happen. The systematic risk in the market will rise and financial markets will correct and pull back, okay? Looking at Bitcoin from a structural stand, $30,000 is an incredibly important level, as on the monthly chart, every single time we see a monthly candle close above the above the prior yearly low of the prior cycle, instance 1, instance 2, instance 3 over here, we end up seeing a macro uptrend. So although on the smaller time frame we had broken the macro uptrend trigger, you can see we said bullish about 30,000, we are by no means in a macro uptrend yet, okay? We are in a weekly uptrend, we are in a monthly uptrend, we are still developing that macro bullish trend. In fact, we need to see a monthly candle close above this level to validate this yearly long resistance as a yearly long support in which the price can develop and continue upwards. Looking forward to the short-term price action, or looking at the short-term price action, what do we expect Bitcoin to do on the higher time frame if CPI comes out positive? So let's say CPI comes out positive and the price continues upwards. The next logical target for Bitcoin is going to be, according to the chart, this gap between the 32,600, okay, and 35,500 level. This is going to be quite a large gap. It is actually a CME gap as well on the CME chart, where a lot of liquidity or orders are going to be placed for shorts or for longs, or etc, etc. We're going to find a lot of liquidity there. So that is going to be the next target. If Bitcoin does continue upwards, we could see a push as high as 35,500. However, the next major macro resistance on the horizontal chart is sitting around 40,000. We can see the jump up in the VRPV over here. If we look at the VRPV and we look at the VRPV has been acting, we can see the move from 30,000 towards that 38 to 40,000. We can see the VRPV is actually slightly increasing. This means we have increasing resistance within this move from 30,000 to 40,000. That means we need increased volatility and increased volume to push through that range, which means we have increasing resistance, and therefore the price is not going to move as quickly through that range as opposed to something like this. We saw this massive move up, but sort of very, very large gap in the VRPV prior. We saw a massive volatile move up. However, that is not the case anymore for Bitcoin. We will see a slower, more drawn out grind upwards if we do get positive data, rather than some crazy ass candle upwards in a week. All right, it's going to take time. It's going to take a bit of time. So let's move back to the 4-year cycle. Then we'll come back to a technical analysis on the daily, and then we'll go talk the immediate short-term price action and talk about what we're seeing happening on the Bitcoin chart right now. So let's go talk about the 4-year cycle, guys. If we look at the 4-year cycle, you're probably thinking, okay, Bitcoin's over 30,000. The bull run is back. Hell yeah, guys, let's go. Well, that's not really the case, okay? If we look at prior cycles, and particularly, we do a date range trend of prior cycles, we can see that average bear market lasts around 13 to 12 months, okay? We can see the same thing over here. The average bull market lasts around 19 to 18 months. And the period between the bear market end and the bull market start is around 16 to 17 months. So applying that to this instance, we have around 16 to 17 months from the bear market bottom until the bull run officially starts. That is going to put us around March to April 2024. However, this does not mean the price cannot rise between the bear market bottom and the bull run start. In fact, in prior cycles, we have seen 300%. We have seen 230%. We could definitely see a significant rally to $48,000, which is a 200% rally, before we get the bull run to officially start. Now, there's a big difference between macro uptrend, macro strength, and a bull run, okay? The bull run will start after the halvening at this specific date range, okay? If we look at the prior cycles and we look at the price action within the bull run, we can see it's very different in comparison to the price action within this consolidation phase, or slow grind upwards. we have much steeper price action, we have much larger wicks, we have much larger candles, and we have a lot more green candles. It suggests more volatility, more volume in comparison to this section over here, where we have a lot more chop, we have smaller green bodies, we have larger wicks, and we have more consolidation, okay? So we will see a grind upwards slowly to 48,000, okay? 40,000, 48,000 is the local top, this dotted line over here, but it will take some time. And if we are going to see that move upwards to validate the continuation upwards, we are going to need to see a $30,000 monthly candle close above that resistance to put us into a macro uptrend, guys. Again, the CPI data and economic data is going to be incredibly foretelling in regards to what direction the market is going to take. But going off the 4-year cycle, again, the market looks great. We've been saying this for a long time, guys. Although we have been more bearish at this resistance, which we still do remain until we close a monthly candle above, we do, and we have been very bullish. Again, we bought at 16,500, we bought at 18,000, we bought at 19,200, we bought at 21,000, 20,000. We expected this uptrend. We have a bullish trend. There is no need to be higher time frame bearish. Looking at some more indicators, if we look at this chart over here, we can see we have a phenomenal break over the Gaussian channel midline on the monthly. Every single time, guys, we see a break of the midline on a monthly, we actually end up going through. This is an incredibly bullish signal, guys, here on the monthly chart. Another really bullish signal here is, of course, going to be on the weekly chart, the 200 moving average and the 50 moving average. If we bring these two up, the 200 and the 50 EMA, we can see we had a nice crossover of these, but more important, not just a crossover, we have the price above both of these moving averages. What we really want to see now is the 50 EMA cross back over the 200 to signify the uptrend is now a strong higher time frame uptrend. Right now, we don't have a strong high time frame uptrend. We have a higher time frame uptrend. We have a developing macro uptrend, we have a weekly and we have a monthly uptrend, but we need to see that strength come in to push volatility into market to really push the price up. This can take time to develop. It may not even cross over into around 40,000, but these are some more indicators we're looking really good. Another one I want to talk about, guys, now is going to be on the daily chart. What we have seen as well is a RSI break on the 1-day chart. This is phenomenal, guys. As you remember, we said if we want to see a break over the high time frame trigger, we need to see two things. We need to see, number one, a break over that high time frame trigger, which is around 28,600, to validate a move upwards. Along with that, we absolutely need to see a RSI break on the daily. The RSI break on the daily happened 1 day prior to the breakout of this trend line, of this horizontal range. So if you're watching RSI, if you're watching momentum, like I said, momentum is leading. It tells you what the market is looking like. It tells you the strength of the market before we see these moves. So if you watched that RSI on daily, you would have caught that breakout. You would have been able to catch this move toward the upside. Absolutely phenomenal stuff, guys. Let's go ahead back to the short term and end up the video on the very short term price action, discuss how we are looking here, and discuss what the next potential move is for Bitcoin. As you already know, guys, we have seen a significant rally upwards. I highly doubt we'll see massive amounts of volatility into the market anymore. I don't think we're going to see a huge move upwards again. I think if anything, we're going to start to see a pullback in the market. If anything, we've seen a lot of moves upwards today. We need to liquidate some of those longs. We need the market to come down a little bit. Now, if we're looking at the immediate short term, we do have some structures developing on the short term that isn't particularly amazing to see. And one of those is going to be on a 5-minute chart. This is a rising channel, right? A rising channel is a bearish structure. It represents a uptrend, okay? A uptrend nevertheless, but it is a weakening uptrend. And we do have confirmation of this, because our RSI does suggest we have a overall bearish divergence. So we take the top, the local top over here, which corresponds to the local top. We take the local top, which corresponds to the local top, and we can notice the angle of these trends are different. We have one down sloping, we have one up sloping. This suggests that this current trend is showing preliminary signs of weakness. However, it is still a uptrend until this trend line breaks. If we break downwards, guys, I'd be expecting a first target in this local range right over here, right above this chunk of support. Okay, this is a nice strong chunk of support, a nice strong baseline of support right over here. You can see in the VIPV, we have a nice little gap in support. If we lose that level, guys, if we lose that support, the next range is going to be a huge drop all the way back down toward this level over here. Again, we have a nice strong area of support right over here. So in the short term, we have an uptrend that is weakening. I don't expect too much higher prices. I think the highest we might see today is going to be one more push upwards, which could take us to around 30,600 retest, maybe liquidation week upwards. But again, if you're looking to take more high confidence shorts, wait for this trend line to break. Look for targets below in these ranges, guys. Okay, for the higher time frame move where we're going to get a validation upwards, we do need to wait for economic data. We do need to see what the CPI shows us to get forwarding or leading information for FOMC, which of course is interest rates. It's interest rates directly impact asset prices, and we do need to wait for the monthly close. Currently, we're still under 30,000. Currently on the short term, 30,000 has been rejected. We have not broken a monthly candle above it. There is no need to front run these moves, but if you have already got in, congratulations. If you're holding spot, continue to hold spot, but be aware, guys, we do need a monthly candle close. The bull run is not back. Don't let FOMO bite you in the ass before CPI comes out. No one knows what the data is going to be. No one knows how the market's going to react. We can only assume things. We can only predict things. But in reality, the data is not public knowledge until it is. And the last thing you want to do, guys, is get trapped into the market before CPI comes out and then it going the opposite direction. You are much better off, if you're bullish here, if you're wanting to price go up, if you think it's going to go up, much better off waiting literally 36 hours. Wait for CPI. Find out the data. If you haven't bought spot yet, then you consider doing it. Okay. Thanks for watching, guys. We'll get into much more detail on the short term tomorrow. I have to speed this video up today. I am running out of time. I hope you have a fantastic day. See you all tomorrow. Join the Crypto Academy course. All information found down below. Send us an email for more information. And that being said, see you guys tomorrow.